Okay, so we're gonna start from there's a couple of you can go to any website actually. There's you can do when you're doing for long-term trading, the data you can go to any website because the data is more like for long-term. You can you're not looking at today's data. No, you're not looking at data that is live, but data that you're looking at, you can go to like a website like finwiz.com, which is a free website, and it has almost the same data that Uber will have, or sorry, not Uber will have. I mean, Seeking Alpha or any website that you pay is going to have the data on that. The only difference is, like Seeking Alpha, it has its own stock ratings. It has all the different stuff that you can find here on this website that sometimes you can't find on Fizz.com. There are a lot of things in here, especially I like the rating system that this Seeking Alpha uses. But it's a paid website. You can also use its free website, but you won't get that much information. You can almost pay $2,000, $2,200 a year for this website, but you don't need to do that. If you're doing long term, you can very well go to FinWiz or any. You can go to Yahoo, and you guys probably use a lot of the other websites as well to find financials, numbers, price to earnings ratios, stuff like that. So today I'm gonna let's look at Uber first. What happened to Uber? Why is it down this morning? And should you be still in it, or should you still buy the stock, or what you should do with it? So today its earnings came out this morning, and the stock already was trading at 52-week highs. But what was the issue with it? So let's take a look at it. What in the news? What's coming out? One of the things you look at the earnings. The earnings were a beat. They beat earnings like crazy. They had $1.20 per share earnings, and they beat it by 51 cents. And revenue was 13.5 billion, and they beat that by 20% year over year, and that was over $240 million. So. But the numbers were beat. We knew the numbers were going to beat. I even said it yesterday, but they didn't like the way the guidance was on this company for the future. Is it a bad? I don't really think so. I think they were expecting a lot from this, and they didn't get that. When you expect a lot, sometimes you don't get that whole lot. People institutions kind of sell it off a little bit, but I don't think there's some big issue with Uber. So let's take a look at it. Trips grew for them 22% year over year, and gross booking grew 21% year over year. That is pretty good numbers. And if you think about it, how many companies out there that are doing what Uber is doing right now? And there's you don't have any competition basically. You have Ride out there, you have Lyft out there, and you have a little bit of a robo-taxi out there. So not much competition with this company yet, but they're getting a lot of rides year over year. And then you look at their income. Income was very good, but 1.1 billion, and EBITDA was 2.3 billion. That's 33% increase from last year. So these are the numbers you want to see. 33. That's not triple digit, but double digit growth, very high double digit growth. This company is growing like it's like some companies just start growing like new companies. This company now been operating like 8 years now, 9 years. So the revenue, the way it's coming in, it's like some new company. A lot of new companies don't have 33% revenue year over year, right? This company is still bringing in a lot of cash. And then you look at its operating cash flow. This is operating cash flow. This is from operating from its business, guys. Okay, from its business, like taxi business. 2.3 billion. That means their business that is running is producing 2.3 billion free cash flow, and 2.2, which is what I guess left at the end there. Operating is 2.3, and free cash flow at the end was 2.2 billion. So then they also give you an outlook on the Q4. On the Q4, and this is what you want to see, what's going to happen in the next quarter. This is where you find out whether you should be still hanging on to the stock, whether you should be maybe selling the stock. So in the gross booking for the next rides is 52.25 billion to 53.5, representing growth of about 17-21%. This is a little bit a negative number. If you look at that number, this number is a little bit negative number from what they've been doing. And that's why the stock has sold off. Okay, this is, do you think if this number 17-21%, 17 to 21% is still a very good number, but that is lower than what the forecasted number was. And this is where Uber kind of said, that people were selling up. But I don't think this number is, even if it comes in this number, this is still a very good number for Uber. And I think once everything settles down, I think the price of Uber, the share price will go right back up. Okay, and EBITDA for the coming, it's 2.41 billion. Compare to 2.5 billion. So if you look at it now, it came at 2.3 billion, right? And if you look at the future, which is going to be around, this was the increase 33%. So basically, they were saying EBITDA came at 2.3 billion, and next one is going to come about 2.41 billion. It's still higher than the present number, but they are saying it's not high enough. It's not much higher than what the number is already came in, right? So they're expecting a lot from Uber because it's been generating a lot for over the quarters. If you go in the past quarters, it's been really operating a lot. These numbers still are higher than the present numbers they came out with. So 2.41 billion still is a lot better coming out next quarter. Now, if they're still saying they're growing 31% to 36% year over year, and I think selling the stock, that a lot of people are, I think it's a mistake here. The stock will return back to the upside. I think this will be, I think it's an opportunity. Instead of looking at a negative side to Uber, I'm looking this as an opportunity to buy. So let's bring it down further, and then we'll, whatever further side will go, well, definitely, if you look at the chart, we would definitely get back into this one. And I'm already in it. I'm not selling anyways, but there's a drop here. Let's go to the day chart. So there's the day chart. I mean, not much loss. So what? It's not a big. I think the stock will come right back up. So again, it's a stock. I don't think the stock is dead yet. So why isn't this showing? There it is. Right. Well, so right there, 93 bucks, very clearly. Where is a strong support on this one? It's right here, $91. I don't think it's going to go below $91. These numbers are not that bad at all, and I'm a buyer here. If you don't have Uber, maybe start buying a little bit here and start accumulating. But if you do have it, I would maybe just wait and maybe see if it breaks. I don't think it's going to break. 91.50 here. It's a pretty solid hold. But keep a close eye on it. If it goes cheaper, I'm definitely in it. Okay. So again, they don't have a transcript out. Uber doesn't have a transcript out yet. So when I go back in here, I can't find their transcript. So maybe by tonight, they'll have their transcript in here. When they do have that transcript, maybe we'll go over it tomorrow. So I just basically went what the numbers they sent out, and I just explained to you what these numbers were. So basically, when you are looking at like a company like Uber or any company that you like and has earnings coming out, you want to compare the numbers. What is the company saying? If these numbers if Uber come out and said, hey, we're not going to have any better quarter than the quarter we just had, we're not going to be doing any better than that, what would you do to a stock? Chances are you would be selling it, right? If this stock is not, it's probably even go down further, right? But that is what you need to see. And to be comfortable with this stock, it came out with earnings, yeah, it's $6 down. No big deal to me because the numbers look beautiful, attractive, and I'll just buy more as it comes down. So that's how you feel comfortable with a stock when you look at its numbers. Hey, this stock is okay. There's nothing wrong with it. So tomorrow, this stock going back to the upside. You know why, right? So very simple. Sorry, it doesn't have a transcript for this one here. Tomorrow they'll have a transcript, and we'll try to look at that more clearly. So what other stocks we can take a look? Anybody have any? I don't look at these numbers. I look at these numbers with you guys, basically. So if you have any other stock you want to bring up, we can go into that stock. Any stock you want to put in here, let's take a look at that, and we'll break that one down. You want to break down Meta, Jaspreet? Sure, we can do Meta. Okay. So let's see, do they have a transcript first of all in here? They should, because the earnings were last week. So transcript. Meta. Where is it? Why they don't have it in here? I'm surprised. They just came out last week. They don't have the transcript. So one of the things we know why. So while we're here, I don't know what happened to earnings. See all the news. See if it's that way. See if I can find the transcript here. This might be. Can we use this one? Yeah, I think we can use this one. Yeah. Yeah, but this is not a lot. So we can look at this right here. This was when they came out with earnings, and that's when they talked about. This was a Wednesday last week. So this is like you can say it's like a transcript, pretty much. But let's see what this is here. You can see when you see a transcript that the CEO is there, CFO is there, so they're gonna explain exactly what's going on with the stock. So here's Zuckerberg talking about their numbers, right? Then Susan Lee reported Q2 number. That's the financial. Their CFO. She's explaining what's happening in the numbers. So she basically went here. So and she, by looking at these, I like transcript better. But again, she explained what the total app revenue was, 50.8 billion, and there was a family of app ad revenue was again that was that. Total expenses was 30.7 billion compared to last year. 30 that was the expenses were up. So they're spending still a lot of money on R&D, right? And the revenue was up 26% from Q3 here, right? What else is expecting here? And to be here, she expected the next quarter, 2020, to be in between 56 and 59 billion. This one here is going to be higher number than the 50.8 billion. So the revenue expected in the next quarter is going to be higher. So if a company expected that revenue to go down in the next quarter, what would you do with it? You would sell it, right? We expect full year 2025 expenses to be in the range of 116 billion to 118 billion, updated from the prior look. So she's saying their expenses are going up, and so watch out for that. And that's why they probably did that capital expenditure, raised that money there, 66 billion, right, 70 billion there. That's those are the numbers. She's explaining the expenses, what's going on, the revenue and stuff like that. But I like a breakdown by just the transcript. It's much better to see. So what I'm gonna do, might as well take this here. Here it is, reading the full contract. Where is this one? Where is that? Earning transcript right there. This is what I wanted. There it is. Finally found that. Okay, let's grab this. I like AI. AI just explains it so fast that so what you do is grab that and you throw it in your chat GPT and it's gonna break it down for you. So if you read this thing is long, just like the other one was a short version that I was looking at, but this is long. Like who wants to read all this? Because you'll be here reading. You know how many companies come out with earnings in one day, and you want to read all this? You can't. Really can't. We had to do it before AI. We used to do it, but don't want to do the. Now it's so easy. It's better to do this. So look at this. This is very easy. You see the other transcript and you see this one. Look how easy it is to look at this one, right? Revenue 51.2 billion. It's up 26% from year over year. That's a pretty good growth. It's like a new company, right? Just like Uber, it's having a pretty good growth. That's why the stocks like this go up as much. They fly to the upside, right? So ads and other 50.8 billion ad revenue on their platform, another 50 billion. That's pretty good. And there's the numbers right there, growth. And if these numbers, excuse me, if these numbers started to come down, that means their revenue would come down. If these revenues would come down, that means you should be out of the stock. So this is the numbers here, 26%. And then if when they come up next quarter, what are they going to be like 20? Are they still going to be able to do 26%, or this number going to lower? When these numbers start going lower, that means the company has fully grown. And if these numbers start getting smaller and smaller, that's when you start to get out of those stocks. Okay, that's when you want to be out of the stocks. So it goes through all the details here. Then it also the expenses. Are the expenses going up? If they're going up, that means less profit, right? Right? So here's their operating income margin, 20.5 billion, 40%. Wow, very good numbers. So why do they need to raise all this money that they're doing, the 38 billion or 30 billion, whatever they're doing? So, I don't want, maybe they're just, taking, they can do it right now, probably. They got tons of money here, right? So earnings per share, $7.25. Reported was all these numbers here. CapEx, they're spending 19.4 billion. Free cash flow, they're getting 10.6 billion. Okay. Capital returns, they did some stock buybacks. Okay, looks like 3.2 billion. They spent on buying some shares back, and they spent 1.3 billion giving out dividends. Okay. All right. So there's your debt. There's their marketable securities they can sell into the market, 44 billion. Debt is around 28.8 billion. Usage and products, 3.5 billion people use at least one app a day. So this is where they tell you whether they're going in their, Facebook or whatever, people following them. So far, this 3.5. It doesn't say on Instagram. It says 3 billion, and these must be their websites where they're telling, and time spent increased by 5%. So when you're going to Facebook or you're going to Instagram, you're spending 5% more time on it, and the more time you spend on it, the better they like it. The more ad revenue comes in for Facebook and Instagram or whatever other websites they use. So this is the positive numbers, and you can compare from quarter to over quarter and quarter over quarter to see if these numbers are still growing. Okay, so Reels, that short little videos everybody sees, 50 billion revenue on that, I guess 60 billion on AI power tools, greater than 60 billion. So these are numbers all you can compare year over year. Okay, so same thing with the outlook. That this is what I like. What's the outlook? Revenue guide, it around between 56 to 59 billion. Lab down, so that's a little bit down on the revenue side. Expense ratio, it's going up, 116 to 118. CapEx, that's how much they're spending on their capital products, capital capital, that's on top of not what this is not their operating budget. This is their capital, the extra money they're spending to bring Facebook or build. It could be buildings, could be anything, could be their technology they're spending this extra money on. Okay, and then they also talk about their tax rate, pretty much there. Um, I know a lot of you guys probably a lot better at looking at these numbers than I do. I never studied. I never got any sort of financials. I'm just going by the number that I always looked at, that I know of. So you guys, some of you guys probably know better to look at these numbers. So correct me if I'm wrong. If anybody has out there a better idea, if I'm saying something wrong here. So I don't mind at all, guys. Okay. What's on track? Q4, 56 to 59 in revenue. CapEx, how much money they're gonna spend? Owned DC versus cloud. Add KPIs, that's pretty much it, guys. There's not a whole lot here, but again, the main thing is to look at what the future growth is. Is the revenue growing? Is the expenses down? What are they spending this money on, right? So that's how you look at this one. Any questions on this one here on Facebook? It is a positive outlook. The problem with this one here, why did it go down? Because they issued $38 billion debt. Is it 38 billion, something like that? What was the number? That was in the news. Okay. The other numbers you guys want to take a look at it is the price to earnings ratio and price to sales ratio. And let's take a look at that. Let's go back into Meta here. Okay. The easier way to show you guys is FinViz. It's probably easy a little bit. Here, let me go to FinViz. Close. Let's go to Meta here. I have to go all over the place in trading, seeking alpha to find those numbers, but here they're all right here. These are all the numbers I'm talking about. Price to earnings ratio 27.79, forward 21. It's lower. This is a good thing, right? The number going forward is lower because that means they're increasing their earnings, right? Price to sales ratio, well, I don't know why it shows this high. It's not this high, actually. If you look at the numbers, it's actually a lot better than what 8.37 is. Price to cash flow, 35.86 times, right? Quick ratio, this is the money on hand, how much money they have. Anything less than a 1 is usually a negative number. Anything less than a 1. So this is pretty good. Long-term debt to equity, beautiful, 0.25. Very low debt, but they are increasing their debt now, right? They can handle that debt because their debt is already very, very low. Okay. Earnings per share this is trailing 12-month number. The last 12, this is what they earned per share, $22.83. So if you take this number and divide it into their current price, that you'll get the price to earnings ratio, right? So, and the next number we want to see, these are all earnings numbers, earnings per share, the growth on the company. You can see this here, basically sales quarter to quarter, roughly 26%, just like doing like a new company. If these numbers go down to negative and lower, that means the company is not growing. And that's another hint for you to start getting out of the stock. Okay. Then insiders own about 13% of the stock, mostly Zuckerberg, right? A little bit transaction, a little bit to the sell side, which is okay. No, they're not major deal. Return on equity, return on assets, right here, green numbers, beautiful, very good return. What's the other one here? We want to take a look at the other number. Everybody knows what beta means, right? Everybody knows that. This is looking over year growth. This is saying what it grew over like per year. Then it's like the last 3 years and 5 years, like 10 years, how fast this stock has been going. So this stock in the last 10 years has grown like 506 times, right? So that's a really good number. Anybody have a question on this? It's a good stock, but the only thing is they are issuing debt. If they didn't issue this debt, I think the stock would be to the upside. But long-term view is if they're gonna take that debt and spend it on something good, right? They're gonna, let's say, build something on where they're gonna be able to generate revenue from. That's a good thing. When you, it's like when you borrow money for your house, right? You're slowly gonna pay it off one day, right? It's the same thing with them. But eventually you won't have to pay that mortgage off. Same thing with these guys. Eventually you won't have to pay that debt interest off in the future, where you'll pay it off with those earnings, right? So it's the same sort of idea. But again, if it's good to borrow money, long as it's a good debt. It's the same thing in a house. Like for us, if we borrow money to buy a car, we're gonna lose on it because the car is not earning us any money, right? It's depreciation. It goes down. We can't sell the car at the same price that we can, we bought it at. So depreciation, that's what goes to the downside there, right? So pretty simple stuff. I'm gonna let's do a GIS. GIS is another one of my favorite stocks. Let's take a look at here, see if they have a transcript. Where is the there? Here's the General Mills Q1. This was September 17 when they came out with their earnings. So we're gonna take a look at this one. And we can also try to figure out why the stock's been going down, right? That's probably what Jaspreet wants to know. Why is this stock going down? And we talked about already why this stock is going down. Let's see what we see in the numbers. Okay. Let's see what the smart AI says. Yes, yes. Why is that? You usually never ask me. Just summarize it. Thinks too much. I like Google AI. It really works well. Very fast too. Okay, so whatever it's given me, let's take a look at it. Quickly, it's not the summary that I normally get. This is not, this is a little bit different. But here's the problem, right? With them right now, because of the machine shutdown or changing their machines over, they're this year, a lot of the products, they are not in the same like growth in the stage like the previous quarters were. So this is not showing the entire picture here. I don't know why this is a little bit different than the previous earnings. So a lot of declines you can see in the revenue. Remember when why I was telling you this stock was going down is because the cereal they made, they put a lot of coloring in it. And Europe took that coloring out 10 years ago. And in North America, we still get those colored cereals we feed our kids. But those things have chemicals in it, right? So JFK Jr. came in this year as a Secretary of Health, and he forced all these companies, including GIS, to take coloring out of the food. And when you take coloring out of the food, a lot of these companies had to reorganize their machinery, and that's what GIS is going through. And GIS, it's in their company report. It's not in here for some reason. It didn't. Let's see if you can find it in here. But if you go to their company report, you can read all that stuff in there. Why they're so right now, their numbers are down. Why are they not in full production and stuff like that? So let's see if you can see what's in here. Result: Q1 unexpected profit is better than expected due to lighter inflation phasing, international trading benefits. But they mention nothing about their machinery here. Okay, Q set to be tougher. Why? Timing benefits. That's why this stock is down. Why is it down? No contribution for devices. U.S. yogurt, only 1 month per quarter. Okay, highly supply chain inflation, normalization and sensitive competition. Okay, still don't mention of the coloring there. Management expects Q2 profiting down more than Q1. Why? That's another one here. Operating down. So why is it down? They didn't clarify here. Okay, I mean the AI didn't clarify. So it might be in their transcript, but transcript it didn't put it in here. Okay, so operating profits are down because of the machinery shutdown. What else is here? Roughly time. So they are giving the the F26. This is not very clear at all. Let me go into other one. I'll show you. Let's see if we can find it there. What else is in here? Pressured food. Okay. See, a lot of negative. You guys see the negativity in here so far? The negativity is pushing the stock to the downside. Okay. What's working? Refrigerated. Okay. Cereal. Second straight quarter pound share growth. Cherry is protein strong. Granola up. Okay. Cinnamon touch. Okay. Still work to do over. So what are they talking about? Still work. Are they talking about the machinery? So still nothing mentioned about that. Then they also got into the pet food. Remember, guys, 2 quarters ago, when the earnings came out, they bought into the pet business. So how is that doing? Not getting a very clear picture here. Coolers, not getting a very picture. Food services, okay. Cost. Headwinds, okay. It's still a lot of negativity, but they don't give me any numbers here. Okay. Still demand more artificial. See that they talk about it here. See that artificial dice removal? This is what's costing them their money right now. This is it. This is what they've been forced on by the federal government. This is what's costing them. But AI hasn't made it very clear here. Okay, all those die removal, all those machinery removal, that's what's happening. They mentioned it here, but there's no cost factor they put in here. How long will they take to change? That's what they're supposed to. That's what we're supposed to read in these reports, and it's supposed to tell us the time frame. Okay, but it's there in this AI report. There is no time frame. I guess we're gonna have to read more reports, more news, what's going on with them. Okay. Okay, so let's see what the takeaways are. Playbook is working early. Okay. Near-term margin profit pressure. Yeah, Q2 of course because of the die. Pet, they're getting into the pet food. Well, okay, that's fine. Cereal, watch. Q2 operating decline magnitude, right? Cooler cost. This is a lot of cost right there. So maybe the next quarter we are gonna get a little more negative. They're not promising anything here. This, excuse me. This looks pretty. Excuse me. So this report looks pretty negative. So you know where the stock's going, right? To the downside. So unless they come out in the next quarter, maybe the positivity, all of a sudden they're gonna come somewhere with the positive numbers. Excuse me. Let me go to the chart here. So GIS. So you know why the stock is going down, right? Look at the negativity in their report, but it's a good stock. I know it's gonna turn around. Cereal, kids are not gonna stop eating cereal. Nobody's gonna stop eating cereal, and plus, it's still a great company. It's just got granola bars and stuff like that. But eventually, it will turn around. But if it gets too much down, I bet you, if this stock gets to $40, somebody's gonna come and buy this company. Companies like Hershey's, or companies like Mondelez, food companies, or Kraft Heinz, if this company goes to the $40 range, somebody will buy out. What will be the buyout price? It's going to be $60, $70. Okay, it's going to be the $60, $70 back to the upside on the stock. Okay, so even if I'm buying down to $40, I'm not worried about this stock. And I know you got to understand a reason why a stock is going down, and maybe one day it's gonna turn around very, all the company has to say, hey, listen, we finished spending our money. Now we're looking to grow our revenue to the upside, and this stock will be up 5-10% instantly. Okay, so don't buy a lot, accumulate a little bit. I have a stock on this one. I'm holding on to it. I started buying somewhere around $58-$60 range, and I think I've been averaging, I've been averaging it down. So, and I'm just gonna hold on till this thing is ready to burst back to the upside. Remember, it also depends on your portfolio. If you have a large portfolio, that's fine, and you can buy and hold. Sometimes people who have a lot of small portfolios, who want to grow their portfolios fast, maybe this stock is not for you. If you don't want to wait around, and you may want to go into this stock when it eventually turns around back to the upside. Okay, but I'm looking to add. The reason is I like averaging down, because when the stock jumps all of a sudden, I end up with a lot of profit, like we ended up with CNR, with Pepsi, and all the housing stocks. That's when those stocks move very quickly to the upside. You make your money back much quicker. Stock like this, it could end by, in the next quarter, they could come out and basically say in December 17 and say, hey, we're done spending money on it. Now we're ready to go back the other way, and the stock will be up 5-10%. Or if the stock hits $40, somebody's going to come and buy it out. They're just gonna, it's too cheap. It's going to get too cheap at that price. Okay. So you got to do your homeworks on it. You got to know the stock that you're buying, what's wrong with it. If it's going down, if you know what's wrong with it, it's going to turn around. You know what? That's what you have to do, is jump into it. So let me see what other newses are on GIS. See if I can find more. If they're going to say, okay, when it's done. Since September when it was in their earnings came out. Also, analysts also downgraded the stock as well. That's another reason a stock goes down to the further side, to the downside. Why? Because it's not expected to come up with to the upside with good news anytime soon. So they downgraded the stock. Here's the transcript. This is another one you can probably read. These are guys that are asking companies some questions. Okay. What kind of questions was they ask here? This is Jeff Simon, Vice President, Investor Relations. He's giving his input. You can read this here. Then the chairman is giving his input. I think at the bottom there should be some questions. Yeah. No, I thought there would be some questions here. Where the analysts, there's usually a page in here where the analysts usually ask questions. That's a presentation. Okay, they're doing a presentation here. Okay, here's the questions at the bottom. See these guys here. This is Nick Modi guy. He works for RBC Capital. He's probably asking him questions here. Let's see if I can find anything on the machinery. Nothing. Then you got another guy here asking a question. I don't know what question he asked, but this is the answer he's getting. There's no question that they didn't print his question, but they did. These are the replies they're giving. I wish I knew what the question would be much easier to see if there was anything asked. Okay, when is your machinery done? When are you done with that stuff? Okay, you guys can read this stuff. Okay, I can't. There's a lot of questions here. So there's probably one in there that you can read. You can, I don't know what. There's a lot of information, guys. Lots to read. You can spend hours and hours and hours in front of this computer, finding out any other stocks. Okay. We know what's wrong with STGs at Devinder is because the stock is big time hit from the tariffs between Canada and the U.S. because these guys operate on both sides of the liquor. You know, in Ontario, they took the liquor right off the shelves, and that's why STZ is hurt. I don't think STZ is gonna recover till we get this. I don't think we're gonna recover till we get the liquor back on the shelves in Ontario, and we get like a free trade deal or some sort of package deal or tariff deal, whatever it is. I don't think this stock is gonna go anywhere till that happens, and that's what's affecting this stock. Yes. And NTR earnings, they're coming out tomorrow. Let's take a look. NTR. We can do this session every afternoon, guys. I think it's pretty good. We can do during the market hours. I don't mind doing it. Look at stocks, learn everything a little bit in the afternoon. I don't mind doing this stuff at all. NTR. This is a nutrient. This is a guy's fertilizer stock. It's been coming. Sorry, this is the American price. Let's go to the Canadian. Kind of scared me. $53 there. $75. So earnings are coming out tomorrow. We still haven't got a deal with the U.S. and Ukraine is one of the biggest buyers of this fertilizers. They're not doing anything still because of that war is going on. Couple of times when Donald Trump came back in April, thought he would solve that issue, and the stock went to the upside. And few times we thought we would get a deal with the U.S., the stock went to the upside. And now the stock is kind of coming down again because there's no deal. We get a deal with the U.S., we get the war stopped in the over there in Ukraine. This stock goes back up. This is a very good stock. I'm not selling the stock. My average is around $64 on this stock. I saw this stock go to $86. I'm not still. While I'm sitting here, I'm still collecting a dividend. When I get my long-term stocks, I usually hang on to them. Some say I should have sold up here. I had lots of opportunity to sell it, but I'm not. I hold on to my stocks a little bit. I should have swung trade this a little bit, but anyways, I'll buy more of it if it comes down. So I like NTR. What do the numbers look like on this one? Are they going to beat the earnings? So like I said, the revenue is going down because of this Ukraine war has been going on ever since, and the United States also because of the tariff war. So that's why the revenue is down. Still between 26 to 39 billion revenue on this company. Okay. The reason I'm so high on it because everybody's gonna need it. We need this company to grow food. We need fertilizer. We need it. So if we don't use this stuff here, we're not gonna be able to grow our food. And that's what this is all about. And that's why it's so valuable. I don't think this company is going anywhere. They just put stuff out of the ground and take it out. That's it. They don't make anything else, right? So it is the largest Canadian producer. I think it's the largest producer in the world probably. There's a couple of companies in the U.S. who do this, but you get much better fertilizer. mostly in Saskatchewan. This company is based out of. Okay, so it used to be a different company name before, but they created one company out of two. There are two companies joined from Canada together to make one of these companies a number of years ago. Okay, so definitely like this one here. What the earnings look like tomorrow? Look, they already guided all this revenue to the downside because they know the tariff is going on. Ukraine's not buying. A lot of countries not buying. So these numbers already been lowered. And this is last time the numbers came in at 14.03 billion, and this number now is sitting at almost half, 8.08 billion. So the number, that's why the stock is going to the downside. So when you're going to compare these numbers when they come out this week, these numbers are going to be almost from half a here. And what is the stock going to do? Stock is most likely going to go to the downside on the next earnings a little more, but how much? We'll see. But you know then what they're already forecasting. If we come in 8.08, that's fine. I don't think the stock is going to move much. But if it comes lower than that, that's going to be a negative for it because these numbers are already lowered. I don't think the number is going to come lower. I think the number will come higher. I think they put 8.08 a little bit too low. I think it'll be more like a 10. Okay. Still, there are a lot of companies. Brazil, a lot of other companies are still buying a lot of fertilizer. Remember, Brazil is still growing a lot of soybeans, right? So all these countries are still buying a lot of this stuff. So even China is buying a lot of this stuff. 8.0, more like it's going to be 10 billion. More like this will beat the number. But the earnings here, look, the earnings numbers already lowered a lot too at $1.34. So I think the numbers will match. It will be beat. It will be beat and beat, I think, pretty much. But again, they will be much lower than the previous numbers. And that's what's going to hurt. People are going to look at that and say, these numbers are worse than the previous quarter. So a lot of people don't understand why the numbers go down. I'm sure the institutional investors, they know, but a lot of individual investors, when they look at these numbers, if they don't do their homework, they'll know, hey, why these numbers is cut in half. That's when they usually start selling. I'm not going to be selling. I'm going to be holding. I'm a holder of this, and I'll continue to hold. Okay. Okay. ATZ. Let's take a look at ATZ. When are the earnings, by the way? Tomorrow? Yeah, tomorrow. ATZ. Artiza. My daughter loves their clothes and she orders a lot of them. I heard a lot of good things about it. This company here. This is a Canadian, I believe it's a Canadian company. TS, yeah. And they're into retails. Their clothing is unbelievable. And they pay their employees really well too. Very well. Very good stock. I know my daughter she said about a year ago, she buys a lot of her clothing from there, and I looked at the stock at that time. I don't know why I didn't buy it, but anyways, there must be some reason I didn't buy it. But she was buying all of her clothes basically come from this one, and I was talking to her actually the other day because more boxes came in. And she said they really pay well. Their employees paid her well, and they also, hire management. They hire within. They don't go outside. They train when their employees come in. They really gotta like their employees to hire them, because they're always looking for that employees to go higher into their business, and that's really a good way to do a business. And they do have loyal. Loyal, believe me. There's lots of kids out there, especially females, that buy a lot of their clothing from this store or retailer. Okay, so it's pretty good. What is it? Is it worth buying now? Let's take a look at the numbers, fundamentals. So statistics numbers. If you compare, these numbers are pretty high. We know why these numbers are high. Why? Because the stock has been running to the upside a lot. Can these numbers go lower? Yes, they can. With the earnings, if the earnings are stronger than the previous quarters, these numbers will come down. Okay, that's when you're, if the numbers are coming strong, that's why this stock will keep going to the upside. Okay, so I like the stock, but I think the stock has run up too much. I would wait for a dip somewhere. If you like this company, it's a beautiful company, but I don't want to chase it. Okay, I don't want to chase it. So I would just hold on. Okay, Tullis, one of those stocks that is not going anywhere. Okay, Telus. Telus is sitting at $20.43. My average is about 23, just or somewhere there. I'm hanging on to it. The stock pays a good dividend. Uh, Again, if you are, if you want to buy, this is a long-term thing. If you are in for long-term, I think you can buy the stock here. But if you already bought it and you're looking to average down, maybe you want to wait a little bit. Maybe see if he can get it to the 19 area. I don't know if he can, but if it does, I think it'll be a cheap stock. Will be very cheap. I think at this point, one of the things I'm always thinking about is companies merging. Why the smaller telecoms is maybe merge it with other bigger telecoms, or maybe we have three major telecoms right now. Is one is Thales, Rogers, and Bell Canada, and Shaw Communications got bought out, and that's what they maybe these companies all need to do is merge with each other to push the stock price higher. Uh, to me, I'm holding on to this one still, and one of the reasons I'm holding on is because of dividend. It's paying almost 8% dividend, and I know it's a negativity in the stock is there. The the debt is there, right? But the negativity, most importantly, is there. But I've been holding this stock now for about a year, so I got about 8% return already on this stock. But even though I'm on the negative side in the capital gains, which is fine with me. But what are the earnings going to look like? I think they're going to beat the earnings. I think the numbers, revenue is fine. It's a debt that service that they're doing is killing the stock. But future, I think slowly as they increase the business, they bought a couple of companies last year, and they're integrating with their own system there. And they should have already integrated that. I think we should see more increased revenue in this one, and this should start paying their debt off. That's more important. Is when you're gonna go in here, and you want to see this debt level go down, right? Right now it's sitting at 33 billion. The number has been increasing over the number of years, just been going to the upside. So they need to decrease this number. Okay, same thing with Bell, and this is what's killing them right now. So I like Thales. I'm hanging on to it, but there's going to be a limit if the stock keeps going like this forever. 8% dividend is not going to help. But anyways, I'm still hanging on to it. We'll see what the next couple of quarters are, and see if we start seeing this number go down. Okay. Any other ones, guys? Any other stocks you want to talk about? I'm overall the stocks that we have. You saw the 25 listings that I have in here. Let's go to the list back here. It hasn't changed. It's still the same. So these are the all the American stocks that I'm holding on. The only thing I promised to do is bring my swing trades in here, which I haven't done yet. Been kind of that Jays game kind of killed me for the last 2 weeks, so I kind of didn't get to the swing trades. Some swing trades are the ones that I have very small number of shares of some companies, and they're all sitting. I'm gonna put them all in here, and you'll see these are the companies that are my backbone that I'm holding on. They're long term that I'm holding. These are all the American companies here. And they also have the cost, what I paid for these companies here on this one here. So far, my returns has been over 50% on this one, right? just remember, I just put 100 shares in here per company, right? So just to keep it, give you some sort of idea what the gains are. Actually, I own more shares than just 100 shares of each company. So okay, so that is this is the Canadian portfolio that I own, pretty much a little bit to the negative side today, right? This one here,
Uh,
this one here we
uh,
bought a couple of months ago. Sorry, somebody's got a question.
yes, but I have a question. I was just wondering how Canadian stocks are going to affect with this Canadian budget.
The budget is coming out at 4 o'clock, and they're gonna be. We don't know exactly what's in it yet, and once we get that budget, I will see what's in there, how it's gonna affect us. And I think a lot of it, I don't think they're going to do too much. The reason they're not going to do too much, because they want to be able to pass this budget through the House of Commons. If it doesn't pass, then we could trigger an election, non-confidence vote in the government. So we don't want an election anytime soon, right? But I hope they pass that, whatever the budget is. And I don't think we're going to see a lot. It's going to be more like a little bit for everybody, so they can get this thing passed. And it's going to. There are also a couple of things that I heard are they're lowering the tax brackets for more like young people. How are they going to do that? We're going to have to see at 4 o'clock what's in it, how they're going to lower it. So they are saying there's a little bit of lowering taxes, a little bit of this, a little bit of that, but we'll be able to tell that at 4 o'clock. Okay. Before they actually go and read the budget in the House of Commons, they actually release it online, so you can see exactly what this guy is reading. The finance minister of his the list. So let's see what it's in it and whether we could have trigger our election. What happens? It's going to be a big thing. I think they start at 4 o'clock. Eastern Standard Time. Okay. So I still like this utility stock, by the way, that UT. It pays 3.26% dividend. I've been this one of these this stock here I've been holding for a long time, but also gave it a buy a couple of months ago, way back when the when the interest rates were going to go lower. Utilities usually do well. This stock ran up pretty good. So definitely, if you still guys can you still buy this stock? It has run up a lot, but again, back here when we were saying buy, back here we were saying buy. I've been holding this for 15 years, over 15 years, and believe me, I didn't sell it when I was up here, and I took it all the way to 17 bucks. Like I was getting a dividend, right? So. So that's why I look what it's been doing for the a very modest price. I bought it back in April 2009. I remember even the price back then was 13 bucks. Okay, somewhere there, 13 bucks. Average was 13. Dividend was at the time was over 13%. So it's paid me more than enough. So I'll continue to hold. Anyway, any other questions? Build your portfolio based on very good companies. Put them away on the side like ExxonMobil, all the companies I mentioned. I don't remember all the companies at once, but when I do mention them, I mention them during the morning updates when I'm talking about stocks. So take notes when I'm talking about these. Then you can always ask me about later. Hey, you talked about this company. Are you still following it? Are you still holding it? Whatever, right? So take notes while I'm talking about different companies. So again, build up a portfolio of again, if you have $100,000, you want to build a portfolio of 8 to 10 stocks, but 8 stocks usually the max, I would say. If you have 100,000, if you have $250,000 portfolio, you want to go between 8 to 15 stocks. Okay, for 250K. If you have more than 500K, you want to do maximum 25 stocks. I don't care how much money you have, more than half a million. You may have a millions or 2 million, 3 million. I don't really care. But the maximum you should have is 25 stocks. Why? Because if you get too many stocks on your list, you're not gonna follow them. Okay, you are not gonna follow them. I know in my brain that the 25 stocks that I'm holding, are you gonna remember all these stocks and when you 30 stocks or 40 stocks if you start adding them up? That's why I keep my swing trades on the side. I don't include them in my long term, or the swing trade or the long term. I keep them on the side. That's the reason. So I don't fall into a confusion. Okay, so and you should do the same thing. And then, well, how much money should you go in each stock? I think money for each stock that you should own, it depends how much. Like if I like CNR and Uber, if I were to put those stocks together, Uber is a growth stock. CNR is not a growth stock. So if the growth is good, like 25, 33%, that's what Uber's giving, I'm going to put a little more money in Uber. Okay, so if you're young, you're 25 to 30, you should be putting more money in very good growth stocks. That means you want to bring your portfolio up quicker. You don't want to be in stocks that are growing very slow. Okay, so you want to put more money into those kind of stocks. And when you're 40 to 35 to 50, then you should be in the mid caps, right? And then as you get over 50, then you should start going into more like income, and drop your portfolio in the growth side, less risk. So by the time you're 60, you don't want to take any risk, because now all the stocks that you have should be in the dividends, and those dividends should be making you income. You should be taking that money off the dividends and going to enjoy yourself. Go take a trip. You earned it, right? So that's how you should be, planning your life, right? And if you have kids and they have TFSA accounts, fill them up. Fill them up. Okay. Any other questions, guys? Anybody have a question of all we talked about? I'm going to stop the recording here. Yeah, I did record it.